All right, let's go ahead and get started. This is the weekly watch list for March 1st, 2021. You're looking at the chart of the Qs, and for all the videos I've done so far, we've really just been talking about the uptrend that's been happening in the Qs ever since we broke out of this little wedge formation, consolidation. We've really just been making higher highs and higher lows. And one of the key ways of indicating a trend, for me at least, is the 20-day moving period average here that you see in this pink color. And one of the key things that we've talked about is just price holding that level, and there were a few times where we dipped below and recovered the next day, which to me is holding that level. Even if you dip for a day, that's okay. But what happened on this Monday was a little bit different. Gapping below the 20-day moving average is a little bit different than going below and subsequently recovering. And not only did we gap below, but we gapped below and closed on lows, which was a sign that further pullback was probably going to occur. Now, as much as I've been harping on the 20-day moving average, I on Monday saw this and didn't really exit positions as I should have. I kept my stop losses. So in my opinion, at least, I think what you need to do is for your short-term accounts is to update your stop losses and to minimize your risk a little bit. Because of what we saw. We saw a gap down and a close on the lows. However, I just kept my existing stop losses, and then of course the following day we dipped all the way down here, and then stop losses started triggering and unnecessarily ended up being bigger trades, or sorry, bigger losses than they needed to be. I did buy this dip actually, um, especially in PLL, and made some good coin, but overall I'm still down a good chunk. But that's okay, right? You know, if you catch this move, right, or if you catch even half of this move and you take a beating for a few days and you make sure you respect your stop losses, then you come out in the end being a winner. So respecting your stop losses and risk management is key. So what do we do now? We're below the 20-day moving average. We're actually even below the 50-day moving average. I do have this anchored view app that I've been showing in all my videos, and it's been holding surprisingly pretty well. We got a tap here, tap here, tap here, and really just sort of an inside, or sorry, a consolidation right here, a little bit of a range. It is kind of worrisome that we did close closer to the lows here on Friday, but March is a new month, new flow, so maybe we get a few days, we come up and maybe we tag the declining 20-day moving average and then roll over. That would be actually pretty ideal, especially for me, so I can get out of some positions. Um, and then, you can catch a quick cash flow type of trade or 1 day, 2 day type of trade, and then maybe roll further over. Volume at price wise, so these are the volume at price bars here. It's a good way to show levels of past demand and supply. For example, this little pocket area that you see here, or folks like to call it a pocket, that means not much was traded there. And so if price was to get into here, there's no real previous history, there's no real previous demand um, here that would come in and say, hey, I want to buy at this period. And so you could quickly zoom through and get down to an area where you did see more price being traded. I guess my take on this right now, I'm pretty cautious. I'm just gonna see how Monday opens up. I would definitely be really cautious if we close below this anchored VWAP. Um, but it's possible that we can get bought up here, and maybe we don't make new highs, but we come back pretty close to the highs, and then maybe we roll over or we just consolidate for a few weeks sideways before making a move in one direction or another. Overall, though, be cautious. 20-day moving average is now declining. We're below the 50-day moving average in the Qs. We closed near the lows on Friday, or sorry, near the low on Friday of this overall range here. I would just be very cautious to open up new positions. Of course, longer term, just keep cost averaging. I mean, there's nothing really to it for your longer term accounts. So quickly, let's just take a look at SPY. SPY, same situation here. Although the one thing that pops out here is that we did hold the 50-day moving average. A little bit more strength here than the Qs, which could be an interesting concept because it's quite possible that the Qs come out strong on Monday and they end up leading us higher. So that's something to keep an eye out for. IWM, quite frankly, the strongest one here. Barely at the 50-day moving average and barely below the 20-day moving average, but still below it, and so you have to be cautious. Let's check out Dow Jones. So this one actually tricked me out a little bit. I'm stuck in Boeing, and this is one of, I guess, the top holdings for the Dow Jones Industrial Index. And so this one is definitely one I'm going to keep an eye out for. It would be really nice if we can get a red to green move, which would show more strength, but futures is showing a green open tomorrow, at least so far. So we'll see how that happens. But maybe a green open and we get back over the 20-day moving average, which would be a pretty bullish scenario for the Dow Jones. So overall, just a cautious look forward. Let's take a look at some tickers that I'm interested in. Again, this is on the long side, so I'm going to be a little hesitant. So PLL, it's a lithium. Again, I don't know if it's a miner or not, but it's a lithium play. And lithium is basically one of the major elements in batteries, whether it be for EVs or even storage or what else? Other, sorry, uses. I got pretty lucky. I've got filled down here on the 50-day moving average. I had a position coming in. I took my stop loss, super lucky. To be honest, this could have been a major loss and ended up getting lucky. And I think I sold. I think I sold down here actually on this day here. So, but we're clearing highs here. I think we're clearing all-time highs. Yeah, we're clearing all-time highs here. I think this might be an inside day. You can see a red to green here for cash flow, or you could swing it with maybe a stop around 56. But this is pretty big mover, right? I mean, intraday, I think you're going, what is that? 10 points, maybe ATR is probably around 10 points. So keep a small position in this. Be careful. Stitch fix. So let me just plant my anchor VWAP. We came down to the anchor VWAP. It does kind of have head and shoulders look to it, but I don't really play that type of pattern too much. Yeah, I guess it does. But watch for a remount of the 20-day moving average. And similar to what we look on the Qs, right? We don't want one day below or one day above the 20-day moving average to indicate or to confirm that it's going one way or another. We do want to see a few days, right? So we see a dip below here and it faked us out, but then we saw the confirmation with a pivot above the high, which kind of gives us more evidence that this is going to continue on. Same thing going back to Stitch Fix, right? We don't want it to only close above the 20-day moving average. Now, if we close on high volume, that might be a little bit more justification for a new trend, but we do want to see a few days above the 20-day moving average for confirmation, ideally 3 to 4 days. So keep an eye out for Stitch Fix. I don't know when earnings are, but that's one to look for. Real, I guess the same sort of sector, apparel wear. It did make new highs and just quietly came down as the market did. Now it does have a little bit of a bear flag look to it here. So you have a little bit of a down move and then a little bit mini wedge. If you get below here, then it could be a nice short. But I was actually taking a look at this for a long. So if you get above this, 2660 area maybe, then you can see continuation. Actually, I would probably in this market, I would just wait for a closing price above 29. Maybe you could use a cash flow type of trade above 2660. All right, so Dynatrace popped on earnings and sort of has just been pulling back nicely. Did have one volume day, one big volume day here as the market did. Let's watch for it to clear the 20-day moving average and this anchored VWAP around 52 for a continuation of an uptrend. Mu, I mean, is there a stock stronger than this? Look at that. I mean, it didn't pull back at all. And I mean, we've almost had 2 consecutive inside days. So watch for a breakout above these highs here. DKNG, I've been seeing a lot of people talk about this, and as well as PENN. You could take your pick on which one you think is stronger. I personally think PENN, chart-wise, looks a little bit stronger. It would be a trend continuation play. Closing price above, maybe you could do above Friday's high, or you can wait till 120.75 for a trend continuation upwards. DKNG, same sort of concept here. This would be more of a breakout play. It's all-time highs. Let's see what the closing price. There you go. And I can just get rid of that. So maybe you wait to, and I think in the way the market is right now, might as well wait for $64 to clear before you enter. Just a few more real quick. Digital turbine, we've talked about this many times. Big mover, or what I mean by that, big mover intraday, I mean it moves 14% one day, so make sure your position size is well. But if we can remount again over this anchored VWAP, I would definitely go long, and maybe just for a day or two for a quick trade. RVMD, a biotech play, and it actually broke out. I missed the breakout. I think I had entered somewhere here, and I actually got stopped out. I think maybe over here for a loss, and then of course, as it is, continued on making a nice, what is this, 40% move. Wow, man, sucks to be me. But we pulled back nicely here and sort of consolidating near the previous breakout area. So if we can get over, I would probably say if we get over 47, 48 level, then you can see a trend continuation happening there. And last one, another play that's just been really strong. I believe this was the earnings day, had dropped and then got bought up, which is a great sign, and then sort of consolidated as the market did pull back. So it had a reversal candle. So a reversal candle is when price goes below the previous day's price, but then gets bought up, because what that means is that people came in around the previous day's price and said, okay, well, I'm willing to buy at that level because it shows value to me. So they came in and bought that up, and now in order to confirm that reversal candle, you would want to see a pivot. And what I mean by a pivot is to see the high of Friday be taken out, and so that creates like a little pivot right there, right? So you got a little bit like a U motion, and there's your pivot. So that could be a trigger for you to go long on Snap. So those are the plays. Stay safe out there. We want to preserve capital. We want to make sure that we're in it for the long haul. So don't go making any crazy moves. I know GME. I was definitely bummed out that I missed it, especially on the dry up of this volume. But knowing me, I probably would have bought up here and then sold here for a loss. So follow your strategies, follow your risk management plan, and one of the things I need to realize is that there's always going to be another day to trade. So if you're not in it, if you miss 3% up move, let's say it happens on Monday and you miss it, well, so be it. There's always another day. So good luck, stay safe, and have a good week.